Hello, I'm Monica Gibson. Chris Waefer joins me down the line for the Dukascopy week ahead. So Chris, making headlines this morning was news of the assassination of opposition leader Boris Nemtsov in Moscow. Now this is being described as a game changer for Vladimir Putin, but do you agree?
No, not at all. Well, people certainly will, I guess, reflect on his murder and the fact that this lawlessness still continues in the country. There really is no political implication. There's no implication for the government. It's a huge stretch to say that this in any way is a game changer. It does, of course, lead to considerably more bad publicity for Russia, which frankly has been relentless since a few months before the Sochi Olympics started. But within the country, I have to say, I don't really see any great impact. And we can see that in the markets this morning. The stock market was up 1.2% at the opening this morning. Investors are much more focused on what's going on with regard to sanctions and in particular the oil price than on domestic politics.
We do have the ECB meeting this week. While clearly less eagerly anticipated than the January QE decision meeting, there are some details on the latter to be delivered. Market players may also be hoping for clarification regarding Greece. But do you think they will be left wanting this time around?
Yeah, no, I think investors will be left wanting and waiting for more clarification. Clearly, this whole negotiation between Greece and Germany and I guess with the ECB is very complicated. It's far from any sort of band-aids or, in other words, fairly temporary solutions to prevent the crisis from tipping over or becoming worse. And a great deal has to be agreed. In fact, I would say some fundamental changes must be agreed within the EU and by the Germans and the ECB before we could talk about an end to the potential, crisis or escalation that might come from Greece. And I think, therefore, we are very much just looking at these kind of week by week temporary solutions that just kick the can down the road, basically, as much as anything else. And nobody realistically expects us to get to a point where we can start talking about a permanent solution and an end to the threat caused by Greece's position, for very many months. If we get there by autumn, I think, or by the end of this year, we'll be lucky. But certainly nobody expects anything, any further details or any further assurance to come over the short term or at this ECB meeting.
Having opted for the surprise rate cut in February, markets are divided on whether the RBA will deliver another 25 basis points rate cut. As for the Bank of Canada, no change is expected from 0.75%. But which economical event would you say has the biggest market mover potential before we get to those NFP figures?
Well, I think it's it's just as you say, it's a whole mixed bag of influences. I guess this is the outcome of globalization that we've been talking about for a decade or more. Is that we now have to look at events like the Chinese rate cut, etc., and maybe what happened in Canada. They're all interlinked. So I think China really is still the big elephant in the room in terms of the global economy, and I think everybody is watching, carefully all the time the news flow from China. So I think really this week it'll be the ECB. It'll be maybe, what additional news we get from China, clarification, the reasons for the rate cut, what maybe information might come from there. And I think other than that, then, we really do have a clear run up to the non-farm payrolls on Friday in the US.
The UK MPC meeting is expected to be a non-event. Meanwhile, investors will be waiting Friday's jobs report. All things considered, what is your outlook for sterling against the US dollar?
Well, of course, we have to frame that answer in the context of the backdrop of the UK election, and I think that look, the bottom line is if it looks like the Labour Party are going to win and form the next government, sterling will take a hit. So really, we've moved away from the Bank of England's the actions or even the near-term economic indicators. I think that now that we're getting up towards 2 months away from the general election, it will be the opinion polls, the political noise, the expectations of what happens after the election, and bearing in mind that then will lead on to this referendum on the UK's position with the European Union. I think we're going to see a much more volatile backdrop to sterling. As I say, near term, if it looks like Labour are going to win, we'll see weaker sterling than if the Conservatives are going to win. But even over that, beyond that, over the next 12 months, this question mark over the UK's position within the European Union, I think that's going to generally weigh on sterling probably for 12 months until the situation is fully and finally resolved.
Chris, thank you. Well, keep informed as to how the markets react to these and other events this week by clicking back for our early updates. For me and for now though, it's goodbye.